All right, what's good, everybody? So I'm back for another trade recap. I know it's been a while where I've done an actual trade recap going over my steps that I look for when I'm entering a trade, but I'm going to try to do it every single day and actually stay consistent with it. So getting right into it, I've been trading for about 3 years now. I found a systematic trade entry that works, I want to say maybe 70% of the time. Okay, so anytime this trade setup pops up, usually I want to say 7 times out of 10 it works. Okay, so it's a very high probable setup. Obviously, it's not going to be a 100% win rate because not everything works 100% of the time. But this is what has been working for me for a little bit over a year now, and I wanted to go over real quick. So if you watch my previous videos, and you know exactly the trade that I look for, but for new people, this is exactly what I look for. So this is going to be the range that we make during pre-market, so London session and Asia session. So let's just say, for example, this is going to be our, let's just say this is our London session high, okay? So let's mark out London high. And this is exactly what I do every single morning. I literally mark out these highs and lows every single morning because this is our liquidity points, okay? And what liquidity is basically money sitting on the table above these lines right here. So above that liquidity point, there's money sitting on the table. And what that basically means, you have to think about it like poker. So thinking about it like poker, let's just say, for example, there's a bank, okay, and they want to stop other banks out, and they see that this other bank has their stop loss above that London session high. So what they're going to do is they're going to try to stop that bank out by pushing price up and stopping that bank out. All right, and what they do is they're putting money on the table. So if you think about it like poker, but let's just say, for example, you're playing with your friends and you have a really good hand and you keep telling them that you don't have a good hand. Okay, you start bluffing and telling them you don't have a good hand. So what they're going to think is that, hey, he doesn't have a good hand, so I'm going to try to keep adding more. I'm going to keep adding more to the table, so I'm going to put more chips down. And eventually, he's going to realize, all right, I don't have enough chips. I'm going to stop putting money on the table, so I'm going to fold my hand. Okay, and now what that does is basically you're stopping that bank out. Okay, this correlates the exact same way. You just have to think about it like that. All right, so this is exactly what I look for every single morning. Let's just say, for example, this is market open. This is market open right here. So that red line is market open for New York session. All right, and now what we want to see is a sweep of one of these liquidity points. Okay, so I combine that sweep with my bias. Let's just say, for example, my bias is bullish for the day. I see, you know, whatever other confluences is telling me, like a higher time frame fair value gap, or, you know, some other point of liquidity above this area. I am certain that price will go within my direction. If not, it's all good. I'll flip my bias. But let's just say in this case, I am for sure saying that it will continue higher and go bullish. Now, what we want to see, if you guys ever hear this, price always wants to target liquidity. Liquidity is always being targeted. Okay, so for example, London low, London high. Those are very prominent lows and highs that are always being targeted. Okay, so let's just say, for example, price comes down. Market opens, price comes down. We sweep that London session low. Now, you might be thinking, oh, we're in a downtrend now. No, we are sweeping that London session low, and that's a liquidity point. Liquidity points are that those other banks stopping them out and then putting more money on the table. Your friend folding his hand, and now there's a bunch of chips on the table for you to grab. It's like poker. It's the exact same thing like poker. Now, what you want to do is wait for the reversal. So let's just say, for example, we sweep that London session low. We find a fair value gap. Boom. Price moves up, creates a fair value gap. We retrace price back in. I am entering longs exactly right when we retrace in. Stop below that low. And now I'm targeting the opposite point of liquidity. So that London session high. So that opposite spot where price will be sitting at. All right. Now, let's just say, for example, boom and boom. That's usually how my trades work out. Now, like I said, it's not going to be 100% of the time where price does that for me. Okay. Oops, I just fucked that up. All right. Okay. Let's just go over the trade recap that I had from yesterday. This is a perfect example. Now, in this case, we don't see that London session got swept. Okay. However, if we take a look at ES, which NQ and ES correlate, think about it, they're like twin brothers, okay? They do the exact same thing and they correlate. Obviously, it's not going to be perfectly exactly what each of them does. However, they worked together, okay? So, for example, let's take a look at this. Market opens and we dump to the downside. I usually look for NQ to sweep. However, in this case, we did not sweep that London session low, okay? Market open, and unfortunately, we did not sweep that London session low on NQ. But if you take a look at ES, what do? We sweep that London session low. This is that London low, and we sweep it right there. Boom. This is creating an SMT. This is giving us the example that one swept and the other one did not. This is perfect explanation and something that's telling me, dude, buy this. If you don't, you're going to miss it. All right. Now, with that in mind, okay, so having my bullish bias and my draw on liquidity being that London session high, now I just have one more step, which is finding an entry point. So in this case, I usually look for an inverse fair value gap or a fair value gap. So in this case, we can see that we have a 1 minute fair value gap. Boom, just like that. We close above that inverse right there, and I am taking longs right at that closure right there. Boom, and now my stops are going to be below the lows. Stops are going to be below the lows, and I am targeting that opposite liquidity, which is that London session high. And what price does? We absolutely run up. Boom, just like that. Now, this is just a good example, but what I did exactly yesterday, I went back a little bit further, so I went on the 15-minute time frame, and I kind of marked out some previous liquidity that we had. So I saw that we already swept this, and now I'm looking for higher liquidity. You know, for the entire day, I was pretty much thinking that we were going to take out that all-time highs and maybe continue higher, which wasn't a bad idea because we were pretty close to it. We were only about 116 points away, which most of the time, usually price makes like on average, usually NQ makes about like a 150 point move throughout the day. So I was expecting that price will most likely want to skyrocket higher towards that London or towards that all-time highs right here. So I kind of kept it safe and I didn't target that all-time highs. What I did was I targeted a liquidity previous to that London to that all-time high. So we have this resting liquidity right here above that range that we made down. And this could be a reversal point because, you know, we swept a bunch of liquidity and there's also, it looks like a 15-minute fair value gap right here. So this could reverse any second, you know. So I'm not looking to target that entire all-time highs, but I targeted this right here. So targeted that resting liquidity right here. And let's make a move all the way back to the start. And what do we see? Price moves exactly to that point, okay? You could have targeted this entire thing if you wanted to. And look what happens. Boom. Instant. Like that obviously this trade was a bit long, but you know, that's about a 40-minute trade, but dude, look at that. Like tell me that's not a perfect trade. Well, here's exactly what I targeted. So if you look at a little bit back, I targeted this London session high right here. So let's move it down. This was the previous high that we created during London session. It is a little bit above the previous London session that we have for the day. So that's exactly what I targeted. Go back on the 1 minute time frame. Boom. Okay, targeted this high right here, and I'm done for the day. I don't have anything else to do. Okay, this is exactly what you need for the day. You don't need, you know, 150 point moves. You just need something light. I don't know why that just disappeared. Where'd it go? I don't know where the fuck it happened. Okay, you don't need a 150 point move. You can just take something light like this. So think about it like this. This is, let's just say we enter longs right here. And what is going on? What the okay. And we're back. Okay. I don't know what's going on there. Let's just say you target that high that we had from before. Okay. This is about 46 points. This is 46 points. Okay. So now if you do the math, let's go on to Google. Let's do the math. So this is how you calculate your profits with your contracts. So it's basically this type of equation. So you do contracts. So the amount of contracts times 2. So since if you're trading on MNQ, you're doing 2. Now if you're trading on NQ, you're doing 20. Okay, so just keep that in mind. And then you close the parentheses, and now you're multiplying that entire thing times how many points you had. So let's just say that was 46 points. Okay, so that's exactly our fucking equation that we're looking at. So contracts times, so contract size, how many contracts we're using on the trade. So let's just say, for example, I'm doing my normal size, which is usually about 7 contracts. So 7 times 2, which is 14. Okay, now you do 14 times 46. Okay, so let's just say times 46.2. That's $646. That is a weekly paycheck for someone that is working a 9-to-5 job. Okay, you can't tell me that this is something that does not work, because this is literally proof is in the pudding. This is exactly what I do every single day. And if you guys do not realize that, you guys are doing something wrong. Okay, if you are in the age from 18 to 25 and you do not have your life figured out, if you're not making money online, you are doing something completely wrong with your life, because you will be left behind. Okay, I'm being dead serious. You will be left behind if you're not doing something about this. Okay, now let's just say, for example, hypothetically, you have 5 accounts. Okay, 5 accounts. You take this, you copy trade this times 5. Bro, oh fuck, wait, times 5. That's what I meant to do. Bro, you're making $3,200. That is someone's monthly paycheck, dude. That's the average monthly paycheck. Let's look up what's the average American monthly income. About $5,000. Okay, that's on average. You're making a little bit below average, but that's in one day. You're trading that shit in one fucking day, bro. Now imagine you're doing that every single day for a whole month straight. Obviously, you're not going to be making that kind of money every single day. You're not going to be making 32, maybe even more, maybe a little bit less. You're going to have losing days. You're going to have break-even days. But hypothetically, you could be making over $15,000 just trading 5 accounts. It is that simple, okay? If you guys really want to get good at trading, you have to put your all in. If you don't want to put your all in, you're not going to make it work. Okay, stop making bullshit excuses, because if you're going to keep making excuses, you're going to get nowhere in life. All right, this is all I have for you guys today. I kind of want to just make a quick trade recap. Sorry, I got a little bit too deep into that, but this is the exact trades that I look for literally every single day. Join my Discord if you need help with trading. I am more than willing to help you out. I do mentorships completely for free, all that kind of stuff. Join it, and I'll see you there.